One of the interesting things about this week has been the fact that we've seen a lot of dramatic momentum. And when we have dramatic momentum, number one, how do we know which direction it's moving in? And how do we know we're committed to one side, bullish, or the other, bearish? We want to be, as often as possible, I want to be a one-way trader. I don't want to be open to long or short, because that inherently means I don't have an edge in the market. And when we're in chop, and one of the things we touched on in the premium video is how to put these flags on your chart. It's a free tool. I walked you guys through where to get it and how to put it on TradeStation and on Thinkorswim. We use that tool to determine, yes, we are in a distribution market trend. And in a distribution market trend, it's even more important to make sure you've got that directional bias down. Now remember, directional bias precedes a trend. We do not have a trend right now. So the question is, if I've got a momentum environment, how do I know which way the momentum is going to be? How do I know which way I want to play the momentum? And the easy way to do that is with anchored volume weighted average prices. You want to anchor what's known as a VWAP. There's two places we anchor it. It's really elegantly simple. There's two places we anchor it. We're going to anchor the VWAP. So we'll call it an A VWAP. We're going to anchor a VWAP on the first of the month. All right, first of the month. So we got the anchored VWAP the 1st of November right now. And I want a 10-day rolling anchored VWAP, which means every day I'm updating it to 10 days ago. So I put those in on this chart. You'll see that the 10-day anchored VWAP is the dotted line, and the first of the month anchored VWAP is the solid white line. So dotted white line rolling, solid white line, the first of the month. And this is on a daily time frame. So I determine my directional bias for day trades. Some of you that took my day trading class back in September will remember that. And even for my end of day trades, my directional bias is going to be based on volume weighted average price. So when did we get above both the 10-day rolling and stay above the first of the month anchor? It actually happened on election day. So as of election day, whether it be gold, whether it be Home Depot, whether it be the NASDAQ, I went bullish on the directional bias, playing intraday long only and playing momentum long only and looking long only as of that day. But let me mention this. What do you do when you have a stock like CRM, which was this week's trade of the week? What do you do when you have a stock like Home Depot, where there are yellow waves, but the ready, aim, fire? Let's go to the ready, aim, fire toolkit here for a second. This is the layout where this is where I'll go when I'm looking for a setup in a market that's moving sideways and bouncing between overbought and oversold. First of all, which direction am I going to favor? I want to always have, again, that bias. Which direction do I want to favor? Really simply, the trend that was. Easy peasy. Now when I have the sideways market, my emphasis is more on what we would be called oversold, the lower end of this range. And when I've got this sideways market, distribution market, then I'm going to start to look at where the ready, aim, fire and my Darvis levels, or ready, aim, fire, and my volume profile levels are overlapping. When I get that, now I know I can take advantage of getting long with a call, selling a put credit spread. These are the advantages you have when you know that the market's getting down towards an edge. And remember, your advantage is at the edge. Your edge is at the edge. That's been my mantra for decades. How do I know I have an edge over sort of the mass think? You know, the traders out there, the masses. How do I think I know this market's going to stop and reverse as opposed to keep going lower? Well, the underlying market trend is what increases the probability of that. And the ready, aim, fire assists with the timing. All right. So at Home Depot would be looking at the bottom of the range in a choppy market. So I don't want you guys thinking we can't focus on potential chop. We absolutely can. It's just a shift to a different toolkit. All right. So another request is for Twilio. Sure. All right. So here we have a yellow market. Yeah, absolutely. Now, I don't want to be in the middle of the range. So this is a cool question here coming from the chat room as we do this taping live. Here's my range. All right. We have a gap here. So there's the gap offering a certain degree of support and resistance. And I'm looking for the ready aim fire to assist. And I'm also looking for the gap itself is a level of support. So you can see the gap was in play. The pattern that we're looking for is a minor low or an inside day, gang. And we actually had that happen right in here. Right in here. And then if I look down, if my ready aim fire is in the ballpark, I might even front run the ready aim fire, because before the ready aim fire says go, it's getting me ready. That's what I love about ready aim fire, right? And if I already have some other levels, technical levels, gap levels, the confirmation of a distribution chop, and I know I'm in a sideways chop, I don't mind putting on a position and maybe front running the process just a little bit. So cool question in terms of, what to do in a sideways market. Keep in mind, we're in distribution and in choppy markets. We want to be stock pickers. We want to go look and get more granular within those sectors, looking for relative outperformance. That's what we cover in depth in the premium video, how I'm setting up my watch list for next week. And I hope that was helpful. I'll see you in the next update.